Hello, everyone. I think we are ready to start. So this is our last market update of the week. We've been doing these 3 days a week now: Monday, Wednesday, Friday, for the last few weeks, and we're gonna carry on doing them. Let me put the risk warning up just to explain. If you haven't seen one before, 20 minutes these take. We'll take a look at the major markets. So we'll look at indices. We'll look at oil and gold. Oil's really interesting at the moment. It's slipped below $60 a barrel this morning, so it's on an 8-month low, the price of oil. We'll take a look at that. We'll take a look at the pound and the euro, and also actually there was some questions via email last time round, just about how to place the trades, because we launched this new platform in recent weeks. So we'll place a trade as well today, just so we can see how all that works. And that's it, I think, isn't it? That risk warning's been up for long enough. Let me just put that up. If you've got any questions, you're watching this on YouTube, there's that chat box on the right hand side. So if you have any questions, the easiest way is to put them in the chat, and I'm keeping an eye on the chat, so I'll try and answer them as I'm going along. But any questions afterwards, drop me an email on david.jones@capital.com, and I'll answer them via email. Okay, that's it. Let's have a look at the platform. What should we start with? Let's start with the price of oil, actually, because this is really interesting. Let's bring this up. We were looking at this earlier this week. Let's just look at. I mean, it's been almost a textbook downtrend. I put the oil video went up on our YouTube channel last night, and it's proved quite popular. I think it's probably the second or third most popular market with our clients. But we've seen what has been a fantastic downtrend in oil since the beginning of October. So beginning of October, price of oil, this is US crude oil. There's also, of course, Brent crude, the UK version. But we saw oil hit almost a 4-year high, pretty much a 4-year high, just shy of $77 a barrel. At the time of recording, I know what I've got to do. Let me just make my browser 200%. So the fonts are a bit clearer. Here we go. So at the time of recording, it's trading pretty much at 60. And you can see this is an hourly chart we're looking at. It slipped briefly below $59.50 a barrel. But it really has been almost a textbook decline recently, over the last 5 weeks or so. It slides lower, finds a base, breaks the base, classic breakout trade, sells off a bit more, stabilizes, breaks below, a bit choppy here, breaks below. And then the last level we were looking at from earlier this week, about $61.30 was the level we're looking at, broke below that, and it slipped almost a couple of dollars lower. So this trend is still going. It's a market that is still under pressure. To shake off this trend, to even suggest that maybe we're going to get anything approaching a half decent recovery. Well, if we're looking at where the trend line is now, let's say it's $63.50, so $63.50 a barrel. So we'd need a $3 rally at least from here. So I think it's a really interesting market. But what's interesting, apart from the trend we've been in, is what it's done to that uptrend. In the summer when we were looking at this, I was talking about the trend that had been in place since the summer before, and actually even since these lows. That might be quite interesting. Let's pick up on this first of all. So the Feb 2016 lows, when oil got, if you can believe it, as low as $28 a barrel. So let's just pick up on that trend and see what it looks like. So if we're going from down here up there, okay, that's interesting. That is still in place. Okay, the major recovery for oil from $28 a barrel. So if we were looking at that in this context, the move we're seeing at the moment is a move back to that longer term trend line. And it does highlight just how important these lows are. These are the lows for 2018, the February lows at pretty much $58 a barrel. So for the longer term picture for oil, 58 is the one, is the level to watch. But you can see just how vicious that decline has been. We've gone crashing through these big old supports at 63.5 from June, and also in August, pretty much crashing through the April lows. Today we've gone below the low from March, so we're at the lowest now since Feb the 14th. It's a 9-month low on oil. And only 5 weeks ago, it was at a 4-year high. So it's been a major turnaround. There's a few reasons for this. I think it is supply and demand. This month, I'm sure you're aware that the the sanctions kicked in. So the US sanctions against Iran kicked in from the beginning of November, and there was a concern as to what that would mean for the oil price. But we have seen other producers massively ramp up oil. For example, the US is at record levels of oil production. I think it's 11.5 million barrels a day is where the US at. That's up 20% on the year and is 3 times as much as they were producing, I think it was a decade ago. So even though those sanctions against Iran are in place, other oil producers have stepped up how much of the stuff they're actually getting out of the ground. And that's we still have the supply there. We had not record, but we had greater than expected oil inventories this week. The oil inventory is a number that comes out usually on a Wednesday, and it's basically how much oil is stockpiled in the US, and that was more than expected. So I think all of this has served to weigh on the price of oil. So it's going to be interesting. It is still weak. It's still, at the moment, any strength in oil still looks like an opportunity to sell short into this downtrend. But it's going to get interesting again, I think, the next couple of weeks, because we're coming back to this big old support line. Let's just put a squiggle on here. Let's get an indicator on. Let's use something simple like the RSI. There we go. Let's change this to a 10-day RSI because it's 2 weeks. It's going to be really oversold because the market has gone. I mean, we haven't been. When were we last oversold? 2014 was the last time the oil price was this low oversold. And look, it still carried on going lower. So just because an RSI is oversold doesn't mean the market has to go up. But $58 is the big level to watch over the next few weeks. So we will keep an eye on that. But at the time of doing this on Friday, it is a market that is still incredibly weak. Flipping it back to the hourly charts, we need to break through at the very least $63.50 a barrel to show signs of shaking off this weakness. So oil still under pressure, and it's dropped. Was it 20% drop in the price of oil in about 6 weeks, over the last 6 weeks? So that is a sizable sell-off, I think, for any market, particularly a major one like oil. Right, that's the price of oil done. Let's take a look at some other markets, because everything else has been interesting. But let's maybe start off with pound against the US dollar. Let's take a look at some of the FX markets. So this morning we did have the latest GDP number, so gross domestic product for the last 3 months for the UK. I think the expectation was for about 0.5% growth, and it came in at 0.6% growth, the best quarterly growth, I think, for a couple of years. So that's been positive. The pound's been under some pressure. And I suppose, I think like we saw with the US payrolls last Friday, you get a number like today that says, okay, the UK economy seems to be doing okay, but the pound has fallen, and for some people that can be confusing. Well, if the UK economy is doing okay, or if any economy is doing okay, the concern is that maybe it encourages the central banks to raise rates a bit quicker. So, and maybe slows down the economy. But we've seen a bit of a wobble for the pound, but nothing really that major. It was only a couple of days ago it punched as high as 131.50, 131.70, that sort of area. We've got the old lows, and this is the daily chart we're looking at. We'll look at the hourly chart in a minute. We've got the old lows from August, sort of 126.50, 127. They are a major level. They held again during the last week of October. Let's flip over to the hourly chart and maybe look at some of the short-term levels to watch. We have seen a really strong rally in November, and at some point it was going to have a bit of a pause. Maybe that's what we're seeing at the moment. But we saw this rally on hopes that there was a deal for financial services after Brexit. There was news over the weekend just gone that maybe the Brexit discussions were a bit further along than was first hoped. So it's a market that is, I think, very much driven by Brexit rather than maybe the economic fundamentals at the moment. So it's drifted off the last couple of days. Perhaps some levels to watch going into this afternoon. If it gets that low, we've got the lows from Monday. So the lows for the week so far, 129.60. So about 60 points below where we're trading now. It did go as low as 129.85 this morning. So 129.50 to 129.60. I think are the levels to watch going into this afternoon to see if we see some support come out. Let's see what happens. But maybe we'll have a quiet afternoon in FX. But I think when we do this again on Monday morning, assuming these levels haven't been broken, those will be the levels to watch going into next week. A quick look at the euro. Let's take a look at that one. So let's bring up the dailies. I mean, there is a really big level to watch on the euro, and it's the euro has been hit much harder, it seems, over the last couple of days. And this is a really interesting one, I think, because we picked up on this earlier this week. It's a really obvious level, but it's about 113. So down here. So the lows for euro dollar 113, the middle of August. The market had a 500-point rally, sells off back to 113 late October. It was rallied again, and here we are. We are now 45 points above that level, and it is a massive level. If we scroll back, here we go. I think if 113 breaks, I mean, you never guaranteed if a level breaks that a market is going to start a new trend in the direction of the break. But I think because it is such a big level, you'd expect, first of all, there to be lots of stop losses below that level. It's a level that has been defended pretty well over the last 3 months. And I think if we did see 113 break, we have to start targeting a move back to maybe the 110 area. So the lows from May 2017. But for now, it has held. So, arguably the weakness we're seeing at the moment, the trade is to be a buyer looking for 113 to hold. So stops below 113. Let's see what the hourly chart looks like. So, I mean, we've seen a bit of a bounce back for the euro over the last 4 hours. So arguably, I mean, probably the better trade is to leave it till Monday. But arguably, if you absolutely had to do a trade on euro dollar at the moment, clearly this isn't financial advice, but being a buyer with a stop under 113 is the logical thing to do. But again, if we have a quiet afternoon, let's come back to it Monday lunchtime, see where the market is, and take things from there. So someone's saying, do we send out tips on Capital.com? No, we don't, because we're execution only. So we're regulated. We recently, in the last couple of weeks, got our FCA license. We were regulated out of Cyprus before, so now we're regulated out of London, but we are execution only. But I do, so we can't offer buy or sell advice. But if you are subscribed to our YouTube channel and you're watching this on YouTube now, if you click on subscribe, I do sort of between 3 and 5 market videos a week where we talk about stuff like this in a bit more of a relaxed fashion. So spend maybe 5 to 7 minutes on each different market. And while they're not tips, like today, we'll talk about levels to watch and stuff like that. So Euro's interesting because 113, we're 50 points above that. It's been a big level. Let's see if it can hold. Let's come back to it on Monday and have a look what the week looks like then. Let's take a look at stock markets, and we'll do a trade because there had been some questions from clients about placing a trade. So I think let's start off with the DAX, the German market, for a change. Then we'll look at US markets. Then we'll look at the FTSE. I think this is interesting. This is an interesting market. This is the one we'll place a trade on so you can see how it works. So just to refresh ourselves, during the summer, the DAX, the German index, this is the most popular market with our clients, was doing completely opposite to US markets. US markets were going up. Most of the world was going up. The DAX was falling. We had this downtrend in place. But we have seen some stability as global markets have bounced back over the last couple of weeks. We've seen the DAX bounce back as well, although in the last couple of days, it's pretty much given up the gains for the week. So that, big picture levels for the DAX, 11,000, because there's the lows from October, late October. But what was interesting, I thought, is really what's happened over the last couple of days. So if we look at the week so far for the DAX, so where was the start of the week? November the 5th. This was the start of the week. So this is an hourly chart we're looking at. The market sold off a bit, held on Tuesday. Is that right? That's Tuesday, isn't it? Yeah, held on Tuesday at about 11,430. Then rallied a good couple of 100 points. Over the last couple of days, the weakness has brought it back down. And this morning, the first hour of trading this morning, let me pick up on this level. Then we'll put a trade on. It did spike below that low for the week in the first hour, but it's recovered and it's held above it. So for me, it's interesting because it's broken below what had been a big level earlier this week, but it's recovered pretty quickly. So is it a false breakout? So one way of trading this would be to be a buyer now with a stop loss, under the low from this morning, or maybe a low a bit further out. Because actually what is interesting about this level, end of October, the market held at 11,400, and earlier in the day, again, 11,390. So 11,390 to 11,430 has been good support on the DAX all the way through November. And we're currently about 60 points above that level after hitting it first thing. So to place a trade, let's do a trade on the DAX, just again to answer the question for clients how to do this. So you can trade tiny. At the moment it's CFDs. We will be introducing spread betting in the future, but CFDs. So let's say I know where my stop loss is going to go because I know 11,390 to 11,400 is a level. So let me just set the stop up first. So let's say 11,365. Yeah. So if the market trades to 11,365, that's where my stop loss is going to go. But I'm going to be a buyer now, and then I just need to dial up my size. So if I do 0.01, my loss is going to be 80p. Let's say I'm not quite sure how much money I've got in this account. Let's say I'm going to do. Can I do 5? Have I got enough margin to do 5? No, hang on, 0.5. There we go. So I'm going to do 0.5, buying wherever it is now. So I'm risking 41 quid. If I buy 0.5 at 11,460 with a stop at 11,365, I've got 41 quid risk. My margin requirement is 250. I've got 500 quid in the account. Click on buy. And that's it. So it is telling me my margin is low now. So I might want to put more money in my account. But there's my trade. So if you're trading, just go to, so if you want to trade, just go to the trade bar there and you can place the trade. And there's the positions. I think there's a small trade in there on gold from something I was doing a couple of weeks ago. But I think the DAX is interesting down here. So it's because it's come back to the lows for the week. So that was the reason for thinking, well, maybe that's an interesting market to trade with the stop loss below here. But I think stock markets have given up some gains, but still broadly positive. Let's take a look at the Dow. Let's bring that market up. Let's go on the daily chart for the Dow. So I mean, this is the bounce back. It's a strong bounce back from, October was a terrible month for stock markets. They really were massively volatile, falling off a cliff, all that sort of stuff. But a really strong bounce back in November. So on the Dow, we've gone from 24,110 to as high as 26,280. So we've seen a 2,000 point bounce back off those lows. So what's that? About 8%. I think off the lows, breaking the old highs here. So for now, at least, given the ferocity of this bounce back, not surprisingly, it has approached overbought, given the size of the move. But, arguably, breaking these old highs and the strength of the bounce, it's still positive. So any weakness potentially looks like a buying opportunity. So let's take a look at some levels. So here's our chart picking up on those lows from the end of whenever it was. Sorry, let me just pick up on a line and pick up on the trend line thing. So if we took it off there somewhere, hang on, it doesn't like me doing that. If you take it off these lows, I think I've just clicked the wrong thing. Looking something like that, we're still within that trend pretty much, aren't we? So we are, even as we speak, in the last couple of hours, it's sort of dribbled down to that trend. So arguably, we could see a bit of strength off it. And the market has come a long way. We did break below yesterday. We broke below the lows of the day before. So it has been a market that's under a bit of pressure. But overall, that recovery from those lows is still going strong. On the hourly chart, we've pushed pretty much near oversold. So maybe, famous last words, we'll see something of a bounce this afternoon. I think maybe the first level to watch on the Dow is the psychological 26,000 level, this sort of area here, which coincides pretty much with where the trend line is. So I think despite a little bit of weakness the last couple of days, stock markets still seem to be in recovery mode. And on the last one for stock markets, we'll take a look at the FTSE. I'm guessing the FTSE will have benefited slightly the last couple of days from a bit of pound weakness, or won't have sold off as much as other markets. But the FTSE, again, it's bounced back maybe not as strongly as these US markets or the DAX has, but it's been a little bit boring the last couple of days, but maybe some levels to watch for the FTSE. For me, the obvious one from a couple of days ago, it sold off towards 7,000, 7,030. We saw a decent bounce back, 150 point bounce back off that. If we drift down, maybe if it doesn't happen this afternoon, maybe if it happens on Monday, let's watch it if it starts to get back to these low 7,000. So I think it has been quite a volatile first half of the week for stock markets, some big moves Maybe we'll have something of a quieter end today. But overall, I think still positive ending the week and going into next week. And the last market that we will look at is what is it? Gold. Or someone saying I missed the answer for the oil trend. If you watch once we finish this live session, the recording will be available. So I think I talked about oil quite a bit in the first 5 minutes. So if you go back and watch that, it'll be on there. So gold. I think gold is interesting. There's that arrow. Here we go. Let's delete it and look forward to seeing it again on Monday. We've been in this downtrend since April. Traded as low as 1160 in August. Bounced back, broke out of the downtrend. Arguably, for my money at the moment, we have something of a recovery trend going on gold that looks like that. Okay, so we're not seeing that dramatic a move, but 1200, big support. I think 1200 through to 1210, 1215, big support for gold. It's sold off pretty much all this week, not massively volatile again, but it has dropped, what, $15. So it's dropped, 1.5%, something like that. I think if it starts to drift down to this level, this is where I'll be looking for this recovery trend to come back into play and for the price of gold to hook back higher again. So for me, the recovery in gold is still going. There's maybe a bit more scope for a bit more weakness on the down move, but ultimately I'd be expecting it to turn around and push back up to 1245, 1250. Let's see what happens. We'll start wrapping things up there. So I think going into this afternoon, the interesting market, the really interesting one to watch is crude oil, because that trend, it's back below 60 again now. That trend just continues. But on the daily chart, we've got a big level at 58, and the 3-year trend line, whatever it is also coming in at 58. But it is still weak. It is a market, if you look at on the hourly chart, that is still pretty weak. It is very oversold. We could get a rally, but it needs to rally through at least 63.5, $64 a barrel to suggest that maybe things are changing. In the really short term, the DAX is interesting, the one we did the trade on, because it's pulled back to the lows for the week, and so far at least we are seeing something of a bounce back, and I'm making a massive £1.70 so far on the DAX trade we did. Let's see. We'll have a look on Monday and see how things ended up there. But for this week, we will wrap things up. So as usual, any questions, put comments under the video afterwards, send me an email to find out more about the company, open an account, go to Capital.com. We've got a great phone and iPad app thing. If you go to wherever you normally get your apps from and search for Capital.com or Capital.com trading, you can download that and play around with it. But for this week, we'll wrap it all up. We'll do it all on Monday. Thanks for coming along, and hopefully see you again 12:30 Monday lunchtime.